Good day, it's the Market Sniper. Yes, it's Friday, and what does that mean? Well, it's a special Friday. It's non-farm payrolls Friday. We'll be taking a look at the traditional markets. That's right, today we will take a look at the traditional markets for a full hour and a half, all the way across our inflation trades, equities, indices, oil, indeed, oil. We'll talk more on that in a second. Gold, silver, when has it turned? Will it start to base? Yes, we'll talk about that and the equities related to that as well. Other potential equity opportunities. And then after a half-hour break, we'll have our crypto sniper session, which will be an hour and a half, which will take in Bitcoin, Ethereum, the alts, what's likely to happen over the weekend. But the number that comes at the back end of the traditional markets could be very important for the direction that crypto takes over the weekend. Will there be an upward drift or will there be a distributive drift? Generally, it's not the highest volume trading. But if people like what they hear that comes out of non-farm, which could be, let's say, a bad number, a disappointing number, could then point to, the economy's not so strong. The Fed can't taper as strong. The Fed can't put up rates. The Fed can't pull away its QE that it's doing every single month. You've forgotten about that, haven't you? Yes, all those accommodative policies, those could all go. So this is going to be a very important weekend. This is the first non-farm number since the Fed said, no, we are not going to allow, there's concerns for inflation. We will one day start talking about having a discussion about possibly raising a rate at some point in the quite far away future. And of course, they didn't even mention the taper, the QE, that they absolutely need because they've broken the system entirely. By design, they've done so. So let's talk about oil. Well, oil is right now my top favorite of the long trades because it just keeps walking. Never mind what the Fed said. He goes up. That's right. WTI. Look into my eye. Look into my WTI. It says black barrel, black commodities matter. Yes, indeed. Super low vol in this march up. What does that point to? That means it's got plenty further to go generally. Super low volatility. Look at this inching up. This is after the Fed said, we're going to be tapering. We're going to do this. We're going to up rates. It's going to happen sooner. Believe us. This time, believe us. This time there's a wolf. That's coming. Unfortunately, every time the Fed says that, we call BS and we keep being right. So we're going to keep on keeping on, basically, because it's called continuation. It's called knowing that a liar is a liar. It's called knowing that someone who's painted themselves in a corner is not easily getting out. Does that mean they absolutely couldn't do one single minuscule tiny rate increase like a token gesture? No, they could. They could even do more than one, but they'll be spaced very far apart and they would have to pull them very, very quickly if the intention and the perception of the market was that's what they're going to continue doing. Of course, mathematics means they can't go anywhere near previous rates. During the bull of 05, 07, the average rates were 5%, and there were more mortgages being granted then than there are today because of bad lending standards, strippers and flippers, 5 units at a time, all of that going on, and that was at 5%. You can never even get close to that interest level of debt again. Why? Because the government won't be able to meet its own obligations on its own debt it's created to the pension funds, all the people that are holding that huge bomb that is going to blow up, that largely will either have decades and decades of complete underperformance, losing value and paying a negative real interest rate less the inflation rate that you and I face, so that it continues to taper to nothing, or it actually has a full-blown jubilee. And here is Klaus Schwab's new economic miracle for you all to take, and you can queue up for your UBI, your pension's over. But never mind, if you take your vaccine every 3rd week and your booster shot and all the other things you typically do for your dog when you own one to the vet, you'll get your UBI tokens. That's what's coming. Okay, so very low vol, but marching up. Quite a nice little bump. A little bit of sell-off. Oh, they didn't like the idea that suddenly oil's through 75. There's zero, by the way. That's quite some recovery. About a year and a half ago, you bought barrels of oil. You could have been given them for nothing. Obviously, there was a bit of a unique situation here, but you set up. You still could have got barrels of oil for around about the 30s in November, which is where the entire pre-financialization let's get the word out straight, of the Greenspan era, right down to about 87. My entire childhood, oil was between $10 and $35. You never expect it to go down there again after the 2008 pump to 150. Then we had 3 successive depression, deflation events. 07, 08. Then you had the 14, 16 into the China-Shanghai Accord, which was that big falling wedge, all falling down. Let's show you that. Let's give you the history of oil. Let's show you that again. 3, so you had a massive bull blow-off market into the subprime. Again, I've shown this chart so many times, but it's beautiful. So we put the eye back on and we have a look at the macro history. Here's the macro history for your Rockefeller tax. Yes, it is the Rockefeller tax. The Rockefeller monopolists. How do you get to monopolies? With the help of state. State ensures more state, always. With the help of state, transport beneficial costs through the Rothschild banking cartel and look the other way of government and some of them being bought off, a monopoly was created. If you have less state intervention, you get more natural competition. Wherever there's a monopoly, there was a ceded advantage, a bully, and a government. Always, always. If at the minimum a passive government, usually direct support. That's how you get a monopoly, and paid off corruption. That is a human fact. Anyway, here's your range that you had for all these years of me lovely childhoods. Then the squeezy Japanese, of course, our pal Greenspan showed up here and he became Mr. Liquidity and the big globalization experiment. You had the Goldilocks economy. You never had it so good, they said. The Goldilocks economy. You could buy and borrow more and inflation did nothing because everything got moved to China. Isn't that amazing? And then the first strike of a real depression, and that was shown in the price of oil. How can a price of a commodity go from almost 150 right down to as low as $35? Well, they needed to take their tax down because everyone was a busted flush. Everyone was a busted flush. You got reflated. This was China everything. This was China everything. Everyone's talked about how China was taking over America up into here. And then boom shakalak, second strike into 2016 low. Massive indebtedness. Some of that shine off the great China miracle came into play. They had the Shanghai Accord. China is now indebted like the rest of the world. Well done. They bought everything, all the commodities to put some heat back into this reflation. That was your bull market. This has all been a corrective down market in a falling wedge. You got a weak reflation from their Shanghai Accord attempts, and then you came into the economy is absolutely busted. It was already repo rates, yield curve inversions, all the signals. We were supposed to fall 33 months after the yield curve inversion. That was around about September. And then suddenly the repo rate started falling apart. The economy was falling apart. They rushed through what they'd planned and they pushed it through so that they could mask the collapse that needed to come. And they switched all of the economy off to drive it to a final capitulation low that actually saw futures trade negatively because there was no storage space. It was a hassle to hold all this oil. What were you to do with it? You had to pay people to sit on tankers out in the sea and feed them and keep it going. And you couldn't find anybody who would give you any money for it. It was a negative cost. That's what actually happened. Then the big snapback. And here we are right now. We have just taken the 75 level, a key technical level many times. A key technical level many times. Let's show you that again. Let's lose the 80s history. You've got the story by now. So, what have you had? Bull correction. The bull was the 2007-08. These guys are pump and dumpers just on a scale you've never seen before. You think and you can spot a pump and dumper in a crypto market. You think and you can spot the small pump and dumps. The biggest pump and dump is perpetuated by the biggest orchestrated puppet show of liars that you've ever seen in your goddamn life. All wearing suits, all talking professional Fed speak. They are part of the cartel of lie. That was your pump. That was utilizing debt, and housing was the perfect way to do it. BlackRock picked up all your houses down here, here, and here, by the way, along with Blackstone, Vanguard, all these Rothschild, Rockefeller, mega super owned entities that the Queen has shares in. You can't buy shares in Vanguard. Go buy me a Vanguard share. Go ahead, knock yourself out. See, come back and tell me how you manage. So they had the huge deflationary crashes here in the rebound, but this entire wedge is a corrective down leg in a debasing currency. All this time, all fiat was being debased. Quantitative easing came into play. It started there, and it just got ever bigger, ever bigger. The rate of QE, here is your QE events. You can talk about the global economy all in the oil chart, everybody. The entire story is here. First introduction of QE. It was a few $100 billion back then. Remember those small numbers? A few $100 billion? Yeah, a few $100 billion more. 7 trillion, 7 trillion. Guess what? This entire corrective move, which is the wedge, is now over, friends. You've had your pump on the account of the pump and dump racket where everybody got to feel rich there. Guess what? You're not feeling as rich here on the next move up. It's all going to be inflationary driven. It's all going to be inflationary driven and fiat debasement. Fiat debasement. The dollar has worn the bulk of the fiat debasement since the collapse. The third impulse, 3, the magic of numbers 3. You will learn more about this. The magic of number 3. These guys are numerologists. You will learn about the magic of number 3 in our trading program and our course. Book a call, link below. Grab the mini series if you don't have a penny to your name. Start the learning process. The magic of the number 3. Always, always. It's in our HVFs. It's in the falling wedge. Super spike. Let's do it in orange for you. We're drawing, we're talking, we're buzzing, we're coming on strong. Here we go. Fat cokey time. 1, 2, final wash out the low, 3. Now you start your move. That's your falling wedge. Francis Hunt, the crypto and the market sniper, told you 3 impulses in a wedge. No one else says it. This is self-derived from 35 years and an active brain that is always looking for the reason why things are the way they are in macro technical sense. You get to get that from me, and I'm giving it to you for free today. And there's a whole bunch more that you can respect us for if you want to come on and join. 3 impulses to the falling wedge. What then happens? Break. This is an upside break. You've had your first leg, super pump, on the everybody gets rich leg. You've had your 3 strikes, deflationary forces, pullback leg on a macro basis. 1, 2, 3. We called 2 of those shorts right there and there. The YouTubes are still up today if you care to find them. I don't even care to go and find them and put them in front of you, but they're there. This one was not so long ago. Now we are telling you it's the big long. The next leg, remember Elliott wave. Your first leg, then your down leg. The third leg, this would be for you, in effect, a massive A. That would be a massive B. In fact, let's do caps. Caps, caps, caps. Caps? Caps? And that will be your final C. Guess what? It went to 0. Let's try that A again. Let's put him in there. A. Guess what happens on the CD leg? And by the way, the D should not be there because it's going to be some levels of degree further. Again, as we mentioned on the Elliott's items, your bull leg will be 1.618. 1.618 generally, by proportion, not to the cent, not to the micro, generally and normally overrun, as we gave you a 1.618 sell-off leg on Bitcoin in the Bitcoin head and shoulders after the first falling wedge strike. Down, 1 leg, rally, perfect rally. Also to the same Fibonacci point, to the high of 59, you could have shorted there, the right shoulder, boom, 1.618 down, $30,000 on Bitcoin. From 64, down, back up to around about 59s, down to 30. Real legs, real technical analysis. I'm saying to you, where do you think the number is that gives you a 61 1.8 plus on top of the bull leg here. So it's 1.618. You can find out more. We'll follow through on this in the non-farm trading that we will be doing today. Link below. Why should I do non-farm trading? Well, hey, you want to interact with us? You want to have a bit more time? You want to maybe ask some live questions? You can chat with other members of our real community while they're there. How are you guys doing? How's your auntie? See what I say. Is it useful? Do you come away with value? And guess what? It costs $197. And if you want 3, you pay the price for 2. And you can come and join us for a full 3 hours of content with a half-hour break in between for comfort's sakes. And you can get crypto and you can get traditional markets right here, right now, with us today. I am Francis. I am saying to you, the inflation trade is never off. Forget their news management and their jawboning. The macro chart staring at me right now is taking oil through all-time highs to a number, if I were to tell you, you probably wouldn't believe. You can find out what it is when we do non-farm payrolls today. Okay, guys, thank you for what you've done. Thank you for the likes and shares. I hope you've enjoyed this quick segment. You want more? See you on the link below. We'll catch you then. You want to talk to us about becoming on board? Book a call. We're available even on the weekends on slightly reduced hours. And we will see you. And let's see how that number, that great number of economic improvement and how the economy is recovering, how they like to talk positively. They talk positively while they kill you. They tell you how healthily you will be while they slit your throats. It's duality, it's double speak, it's inversion. It's the nature of the game. It's not about recovery. It's about the Bolshevik agenda that they will have, the totalitarian that is coming, and the cost of goods to you in your dollars. Wow. Catch you later. Bye.